Welcome back to the channel, everybody. I am Mick Alphanim. It's Friday. We made it through another tough week. It's Friday night and I feel all right. What song is that from? This article here is from the cryptobasic.com. We continue to move forward. We continue to win. Nothing stops us. This article here is titled, Ripple Partner Forges New Alliance to Elevate Cross-Border Payments in Nepal. Yeah, one big thing after another. There was something yesterday, and we have something today. So it's here, Tranglo, the esteemed partner of Ripple, has unveiled a new collaboration with another payment service provider and a significant boost to cross-border payment services. Everything is moving at a light speed right now. It says, in a press statement today, Tranglo announced an extended partnership with Asiwa Money Transfer, a top remittance business in Nepal. Every little bit counts at this particular time. All right. And then if you take all of these little bits and you add them all together, it's something major, right? It says, quote, we're bringing omni-channel digital payments for remittances to Nepal, the Ripple partner declared in a tweet. Right? They have the actual tweet here. We're going to skip that because they just reiterate what we already read. Let's move down here. It says Tranglo proudly unveils its latest offering of fortified cross-border payout services, encompassing a broader reach within RippleNet, the payment network curated by Ripple. It says, recall Tranglo partnered with Al Ansari Exchange, UAE's prominent personal remittance business. Says in May, as the Crypto Basic reported, the latest alliance with Asiwa enables Tranglo partners to dispatch transactions directly through Asiwa digital wallet to Nepali beneficiaries. This strategic move aims to elevate the efficiency of payouts to the country and revolutionize the financial landscape. So it continues on here. Read this little tidbit here. It says, also, the announcement highlights Asiwa Money Transfer's emergence as Nepal's fastest growing remittance service provider, a subsidiary of fintech conglomerate. I'm trying to read this correctly here. It looks like it says F1 Soft Group. All right. In addition to the recent partnership, Tranglo is all set to bolster Phone Remit, F1 Soft's core remittance solution with direct API access. Now they have a little bit more here. The next section is titled Nepal's Growing Remittance Industry. I'm just going to give you the number here, but if you want to read the rest, go to cryptobasic.com. It says the country received a staggering over $8 billion in remittances. Wow. I'll definitely take that. I'll take that money. All right. So before we move on, and we have a good video here today, I'm also going to be I'm going to attempt to put out that members only video later on tonight. All right. I'm going to give some shout outs here. We have a lot of great news today. Well, it's not great for the banking system. Holy smokes. You're going to be shocked at some of these things that are going on within the banking system, I believe, in later chapters. But let me give a shout out to Oscar. Oscar's, comment came in first yesterday. Oscar was the champion. Then Ian Flynn. Shout out to Ian. Shout out to Joey. Appreciate you, Joey. Shout out to ProBad. You're never second here. You're always a champion. Salute to you. May all the glory go to everybody who is a subscriber. I take no glory to myself. Shout out to Lil Boss. Appreciate you. Make sure you're getting sleep. All right. I want you to watch the videos too, but I know you said it's late when my videos come out. I appreciate you greatly. All right. I see the comments. Shout out to Marky Mark. I feel the vibrations, right? Oh, you see what I did right there? You know that song? Right. Shout out to Corey. Legendary Corey was in the building. And certainly not last, but certainly not least, shout out to Stuart Brown. I appreciate every single person on this channel, my YouTube family. Thank you so much for being here with us. Okay, let's move on to a little bit more news here. We got a lot of stuff to cover here, all right? So now, this article here is from CoinGape.com. And it's titled, Is XRPL better than proof of stake? I don't know why there needs to be a comparison, to be completely honest. I just don't think with that type of mind. Like, I stay focused on the goal ahead. Just continue to bring in the banks. We're going after the US market right now. Focus, focus, focus. And, over time, more activity and more announcements will occur. That's all we need. No comparison needed. We're dominating. And if you read some of the potent research documents that have come out recently, you'll see that we're dominating. That's some of the stuff I'm going to go over in that members only video. It says every distributed ledger technology has its benefits and ways in which they maintain superiority over competing chains. Ripple CTO David Schwartz has come out to share new light on how XRPL compares with both proof of stake and proof of work systems. It says Ripple CTO revelations on the XRPL. No revelation for me. XRPL is superior to almost everything else. We're going to take that bank money, trillions will roll in. Boom, boom, boom. Next thing you know, Kai's prophecy comes true. New 1%. That's how I look at it. Schwartz shared his take about the superiority of the XRPL as part of his contribution to the very long X conversation, Twitter, that was started by Jorge Stolfi, a computer science professor who advised the United States Securities and Exchange Commission to appeal the decision from Judge Torres. Oh, you on the other side? Oh, okay. I definitely will take note of your name. From Judge Torres, which split the security status of the XRP coin. It says the conversations gravitated toward the centralization or decentralization aspect of the operations of the protocol back in the XRP coin. So Schwartz noted that the XRPL is a more decentralized protocol when compared to either proof of work or proof of stake. He said one way to prove this is by checking the ease at which the trio can be forked, which aligns more positively with the XRPL. The veteran software engineer noted that decision-making on the XRPL is unique, as the majority does not necessarily have to agree with any given proposal. So David Schwartz continues to lay things out clearly and show the truth where there is untruth that is being told. It says, quote, if you disagree with the XRPL's rules, you can have whatever rules you want with whatever people agree on those rules with you. You just can't force other people to live by the rules you prefer over the rules they prefer. What more can you ask for, unquote, he said. He also highlighted the security differences between XRPL and its competing chains. He said it's relatively easier to halt the XRPL in the case of attacks, much more secure. This is a feature that can prevent massive fund drain. You see, there's been a problem with that all over the place, including various problems in the banking system, although they differ slightly, but they're there as well. Says that can prevent massive fund drain and has been seen in other mainstream protocols. XRPL is progressing in a steady way is the next section here. It says the emergence of the XRPL has not proven to be much of a threat to existing blockchain networks. Wow, that's a rather negative take on that. We're not in competition with Ethereum. We're not in competition with Cardano. Cardano does its own thing. Matter of fact, they're one of us, utility coins, right? Solana, we're not in competition with them as a smart contract platform. And, if you're talking about competition for Ethereum and Solana, you're talking about Algorand. That's where you need to look. Hedera, that's where you need to look. XDC, when you're talking about hyper advanced smart contract platforms, that's what you're talking about. So that we're a pure bank coin, liquidity, bridge currency, all of those things. These other companies don't do that. They don't specialize in that, right? Ethereum, Solana, their competition is Algorand, Hedera, and XDC, in my humble opinion, and it's not much of a competition. I'll throw Cardano in there. Cardano is one of our original utility coins. They're doing very well. But if you're talking who's at the forefront, no disrespect. It's not Ethereum. It's not Solana. No, not right now. But anyway, let's move on to another article here. It's just my humble opinion. All right. You don't have to agree with that. So now, a little bit of Stellar related news. So this is not an article. This is a tweet with an article linked from Stronghold Pay, right? One of our companies building on Stellar, doing a great job. They're continuing to try to bring in the big businesses, banks. They're trying to do it all. I love Stronghold. And if you remember, Stronghold was the company that was working with IBM on that particular stablecoin offering. They still have all of their infrastructure set up, right? So they benefit from all of that thing that IBM left on the table. All right. As also that was open source, what they were working on, but you can look all that up for yourself. But it says this: Stronghold teamed up with @Blaze Cannabis and @AlphaRoot for an NYC happy hour convening the growing cannabis industry, from seamless in-store sales to easy online purchasing, we make payments easier. Learn more about our event and work in the space. So what they're doing is, this is a smart company. I like to see things like this because of the strategy. So there's a particular problem going on where certain card companies are not going to be allowing a certain type of purchases. And Stronghold said, wait a minute. If they're not going to allow it, we can do that. We can enable that. So they jump right in and they're trying to seize an opportunity. I like that. I want companies on Stellar that are going to continue to push forward, be innovative, look for new opportunities to bring in capital. And we have that. Stronghold is consistently exhibiting great activity on the Stellar blockchain, building on Stellar. BPV is consistently showing great activity building on Stellar. I mean, it goes on and on and on. We have Wisdom Tree saying they're going to use their Prime app in more ways than one. They're going to expand, and what they have now is just a beginning point. I thought it was going to be that way as well. We have that activity. Then we also have Franklin Templeton came out recently. We covered all those articles, by the way, if you didn't see those other videos. And Franklin Templeton is saying the same. Now we have to wait to see in the future how all of this actually plays out. There's no guarantees in anything. You know, I'm a long-term investor in Stellar. I believe in the project. I think they're going to have a brilliant, brilliant future. And they're doing a lot. I also believe that hopefully at this Meridian coming up, this Meridian event, we're probably going to get a lot of different announcements and revelations. At least that's my hope. And we'll have a lot to discuss after that. I think they're saving a lot for that event. You know, it's a pretty big deal this year. Much bigger than others. They even have Idris Elba, the famous actor, hosting, you know, so I'm looking forward to that as well. But strategies like this, forward momentum, showing hungriness like this, that's what I want to see on the Stellar blockchain. All right, so now let's move on here. All right, because I want to get to a little bit of Algorand news here. Now, this is from Stacey Wharton, the Stacey Wharton at Algorand. I continue to love Algorand. They're going to do a great job in the future. Nothing's stopping them. They just have to continue doing what they're doing and not be distracted by certain nonsense that's going on in the crypto sphere. But this is a tweet from Stacey Wharton. It says here, expansion beyond the metaverse to all kinds of licensing now. So fantastic at Dequency. It says, love where you started and love where you are going. I agree with that. But it's not just Dequency. You know, all due respect to the Stacey Wharton, right? Appreciate everything Stacey Wharton is doing. But there's so many companies on Algorand pushing forward, doing major things. I mean, I think people are going to really be shocked in the future. And this is what I've been saying. There's a few I won't say everyone. When I say everyone, I mean a majority of companies building on those chains. They don't play around. One of them is Algorand. MaPay, Koi Banks. I mean, these companies are trying to dominate. They have LimeWire over there, Napster, Dequency here. You see, they have gaming offerings. These projects continue to steam forward and in their attempts to dominate. But let's read this little tidbit here. It says, this is from Dequency. It says, we've got some news. What does that sound like? Anybody watch wrestling back when Wade Barrett was wrestling and used to say, I've got some bad news. I'm the only one that remembers that. Anyway, that's what that reminded me of. We've got some news, more license types, standardized pricing. These new features are live as of today in the Dequency marketplace. Can't stop. What? Wait a minute. What? Can't stop, won't stop. Who was listening to mid-90s P. Diddy, Puff Daddy music? You know, I used to say that, can't stop, won't stop. Take that. All right. Okay. I'm showing my age a little bit here. Okay. All right. Can't stop, won't stop, expanding opportunities for artists and streamlining sync licenses. And that's what I want to hear. I need companies that have a fire in their belly that are continuing to expand. They're not resting on their laurels. They're going to continue to bring that capital in. Every little bit counts. So when we're in the all clear with the bank coins, the utility coins, crypto is in the all clear, which is going to take some time. You see what's going on, right? Still a lot of nonsense going on, but when we're in the all clear, that capital can flood in from every direction when we're talking about Algorand. They're laying a solid foundation, you know. So I like that. I'm very excited about it. I'm going to leave that there. Let's move on here. We have to get to a lot of this regular financial news that affects the new financial system. That's what's really important, because the fall of the legacy system is occurring right before everyone's eyes, right? So now, this is one way that it tells you that the legacy system is in a bad spot. This is from money.usnews.com. We haven't covered an article from them in quite some time, but they've been doing very well lately. An article is titled, "Banks Keep Up High Use of New Fed Lending Program." Wait a minute. They make that sound very, very good. New lending program. What was the program actually? It came into existence, and it was utilized when SVB and Silvergate Bank and all of those banks went down. It is their bailout. It's their bailout fund. But let me read this little tidbit. So they continue to borrow from that. Remember, I keep on iterating, and I showed a couple articles that informed you that they continue to be bailed out. They're being propped up. The system is a house of cards. It's very fake. I'll leave it at that. This is months after a string of bank failures sent shockwaves through the global banking industry. U.S. banks, multiple, are still heavily using an emergency lending facility set up by the Federal Reserve to help depository institutions meet withdrawal demands. But why would that be happening? If they're healthy, like Jerome Powell has been saying, why would they still need to use this fund? They're not healthy. You see, all of the so-called authority figures, which, by the way, you know, I do not like to bow to authority figures. I do not bow to authority figures. I'm all about people making up their own minds and leading themselves, but that's a completely different discussion. But they're painting a very false picture, which is putting people to sleep. The people are not seeing what's coming. Maybe it doesn't happen. Nothing in life is 100% guaranteed, but everything is leaning towards the way of a mass collapse happening. A mass collapse happening some point in the near future. But let's keep going here. It says, reserved to help depository institutions meet withdrawal demands. Fed loans via that new facility, the Bank Term Funding Program, ticked up by $105.7 billion as of Wednesday. Fed data released on Thursday showed from $105.1 billion a week earlier. So not only are they continuing, but it's increased. Why would that be? I think the most logical conclusion to draw would be that they're in more trouble than people realize. But let's continue on here. Let's move on, right? More trouble is coming. Put all these pieces of the puzzle together. You'll see what's coming for yourself, right? Make up your own mind. This article here is from ft.com, one of our favorite sites to go to. They do a great job. And this article, let's scroll up here. This article is titled, about that Treasury tsunami. I thought what they already did was a tsunami, right? No, there's more coming. All right. It says, as widely expected, the U.S. Treasury has just announced that it will be jacking up the size of its debt auctions to rebuild reserves and finance its growing budget deficit. Wait a minute. How much have they been spending per month? No, wait, not even per month. We have been covering that, but let's not do that. How much have they been spending per quarter? Did you see the recent report that came out about the projection about how much they're going to be spending in the third quarter? Don't worry, we're going to get there. It says here, the Treasury expects it will have to sell more than $1 trillion of bills and bonds. Wow. This is in the coming 3 months. Here is a table showing the auction sizes. Well, we don't need that right now. You can go to ft.com and see that. It says the post-debt ceiling deluge of Treasury bills failed to spark the financial carnage that some were predicting / hoping for. Everything, listen, usually it's a slow catch up. Things occur now, you feel it later. It's the same thing with raising interest rates. Same thing. They do something now, you feel it later. That doesn't mean it's not occurring. It doesn't mean it's not going to occur. It doesn't mean one should not be taking precautionary measures either. You don't need to see. I try to exist at a neutrality, right? Stay balanced. You can see the possibilities and calculate the percentage of possibility something's going to happen better from a neutrality, right? So you don't have to panic, but at the same time, you should take precautionary measures. Just my humble opinion, is not financial advice. In case something does occur, you don't want to be caught unaware. But let's continue on here. It says, and this increase in auction sizes will in effect push out that borrowing into longer dated tenors of notes and bonds. A couple of interesting points in the table above. It says the rise in long-term debt sales will be front-loaded, with the biggest jump in 10 minus, 20 minus, and 30-year debt coming this month. Issuance of shorter maturity notes, 2s, 3s, and 5s, will rise in a steadier fashion. This makes sense if the yield curve is on its way to uninverting itself at some point in the next year. It's better to sell more long-dated bonds when long-term rates are relatively low. Strategists, oh yeah, why is that? You catch that? Strategists at credit sites expect the yield curve to right itself in the next year. Who's buying all of these? As a matter of fact, let's scroll up 1 minute. They had a little meme here, and it actually says in the meme, but who is going to buy all those treasuries? Unbelievable. What's going on here? It says, this makes sense of the yield uninverting. Says it in any event, the chunkiness of the coming U.S. government coupon-bearing debt sales at a time when the Fed is still shrinking its balance sheet. You see the dichotomy there? When the Fed is still shrinking its balance sheet is again worrying some people. Rightfully so. Rightfully so. It says, and to be fair, the numbers are big. Barclays caused a minor stir yesterday with a note on what they term the coming treasury tsunami. And you know what happens every time they do this. It says, which they expect to be a major force beyond the current quarter. That's what I said before. So things happen now, they catch up later. You feel it later. It says, quote, here's a quote. It says, given that borrowing needs are likely to remain persistently high, as indicated by the Treasury's Q4 borrowing need of $850 billion. We believe this process of raising coupon auction sizes will continue for a few quarters, even as the Fed ends QT in the first half of the next year. Wide budget deficits will ensure that the Treasury will still need to issue more notes/bonds to keep the share of T-bills within the desired range. We believe auction sizes will eventually rise to levels beyond the redacted peak. Hence, we expect Treasury to signal that further increases are needed at the upcoming meeting. Unbelievable. It says, as roughly 8 quadrillion pearl-clutching headlines have asked over the past 10 to 15 years, who on earth is going to buy all those treasuries? Well, as you might have noticed at some point over the past few decades, the answer is pretty much everyone. A lot of demand exists for the dominant global reserve asset, especially now that it yields roughly what junk bonds did a few years ago. A recent BIS paper on the effect of quantitative tightening gives an indication of what kind of impact increased net supply might have on treasury yields. Listen, so what happens? We've gone over this a bunch of times. What happens to everything else when all the people are buying up T-bills because they have a disgustingly delicious yield, right? When they're making disgusting amounts of capital off of them. What happens to everything else? What's the possibility there? You see? It says, it's possible that the price impact will be different when it's Treasury Department that is increasing supply rather than the Federal Reserve letting its bonds mature. It says, anyway, quote, all else constant, quote, unquote, is the actual giveaway. What will actually move the bond market is the shifting outlook for economic growth, inflation, interest rates. They try to play it very safe in this article here, but they did a good job. Let's move on because there's more. There's a lot happening, folks. Keep your eyes open. Stay aware. Just my humble opinion. It says here, this article is from fortune.com. And it's titled, Janet Yellen criticizes Fitch's downgrade of U.S. credit as entirely unwarranted. What? How? How is it unwarranted? Let's continue on. So, and it insists the country has the world's most dynamic economy. I mean, no disrespect when I say I believe that's delusional and false. It says here, Treasury Secretary Janet Yellen on Wednesday slammed the move by Fitch Ratings to strip the U.S. of its top-tier credit rating, calling it, quote, flawed and, quote, entirely unwarranted. Wow. Quote, Fitch's decision is puzzling in light of economic strength. They keep saying that, but everyone else is seeing that the economy is weak. When you're looking at actual data, not these numbers that they like to pull together because it makes everything look pretty, right? But when you're looking at the actual economic flow and what's occurring, no, I don't know any other professionals that are saying that the economy is healthy. I think if you interview people on the ground, they would say the economy doesn't seem healthy to them. But let's keep going. It says, puzzling in light of the economic strength we see in the United States, unquote, Yellen said in her remarks, prepare for an event in McLean, Virginia. In the longer term, the U.S., quote, remains the world's largest, most dynamic, and most innovative economy. That sounds good. It says, with the strongest financial system in the world. And listen, I wish it was that way. And what I want is actual repairs and solutions. That's what I want. I just don't think it's going to come from them. I don't think they have a vested interest in that right now. I think that what a lot of authority figures, so-called authority figures, see is that they can make a lot of capital out of the destruction and rebuilding of things, right? Which is nothing new. It says Yellen's criticism is an echo of predecessor Timothy Geithner's almost exactly 12 years ago when he blasted S&P Global Ratings for, quote, really terrible judgment, unquote, and becoming the first of three most cited ratings firms to remove the U.S. from the top AAA tier. Moody's Investors Service is now alone in keeping the U.S. at the highest grade. Fitch late Tuesday cut the U.S. to AA plus. So think about how all of these things, right? Liquidity drain from multiple markets that is possible from a tsunami of treasuries, right? Because if money is going to go there to low risk assets, and it's going to come out of high risk assets. I mean, correct me if I'm wrong. It's typically how it goes. I mean, the market sort of did dodge a bullet, but there was a lot of different catalysts and reasons for that. It was a little bit strange. And as I said before, there might be a slow catch up, but the possibility of a mass liquidity drain, you have them downgrading the U.S. credit rating, which definitely has an effect on the psychology of other countries that want to deal with the U.S., as they've already stated that openly. We read an article very recently coming from some leaders from some other countries that were saying like, hey, listen, if the U.S. debt continues to go up, we're going to have to question how we deal with the U.S. This is what they're saying. That's in addition to all of the dollar dumping that has been going on. You know that there's a huge movement right now to go against and shirk Western systems. All of that has an effect on the deployment of the new financial system and the timeline of that deployment. So I'm keeping an eye on this. It says here, Treasuries show little immediate reaction to the Fitch move. Then there's that effect, right? The possibility of that effect. It says, but then slid Wednesday morning in the wake of stronger than expected jobs data. They accelerated their sell-off following a bigger than expected plan for increased U.S. debt issuance. We'll stop right there on that article, okay? Once again, that's from Fortune.com. Let's move on here. We have an article here from USA Today. More bank problems every day now. It seems like I'm reporting on bank problems. This from usatoday.com. And it's titled, Wells Fargo Missing Deposit Issue. It says here, a, quote, limited number of Wells Fargo customers have been unable to see recent deposits, according to the bank. Did you imagine that? You just put your money in. You go to look at your 125K or something like that. And you can't see anything. Can you imagine that? Could you imagine that? It's unbelievable what's going on here. This is why trust in the banks is at an all-time low. Just one reason. It says various customer complaints were posted on the social media site X, formerly Twitter, Thursday and Friday, with users voicing concerns about missing deposits. So they can't even, like, as opposed to if they're using a wallet on chain, which I believe that wallets on chain will be much more advanced in the future. They'll be like checking and savings accounts. But the difference is you send your money here or there or wherever you're doing the transaction, you can see where it went. With them, you can't even do that. And are they providing answers? Let's see. It says here, the website Down Detector also shows a spike in user reports indicating issues with Wells Fargo Thursday and Friday. Quote, the vast majority have been resolved and the few remaining issues will be resolved soon. It says, we sincerely apologize for any inconvenience, unquote. That's it? That's what you get? Wow. It says, reads a statement from spokesperson Julia Bernard. Customers with sufficient funds, including funds from deposits not visible to them, will be refunded any fees that may have been incurred. Hopefully that's true, and hopefully they do that. I will say this, they can't be given back the stress and time that they have spent, right? This shouldn't have occurred in the first place if the banking system is as healthy and secure and safe as they have been saying. This is the complaint. This is why the new financial system is going to dominate. It puts the power in the hands of the people, and the people know that. We're getting there. The complaints follow a similar issue in March when some Wells Fargo customers had missing transactions on their accounts, quote, due to a technical issue. So they're not even technically sound. Unbelievable. It says, according to the bank. So be careful out there, folks. Be careful. Check the health of your bank. Stay on top of this news. If you're using a bank, I know a lot of you have alternative ways that you do everything. Okay. So now let's move on here. We're getting to the end of the video here. We're flowing today. We're doing a good job, in my humble opinion. I hope you're having a great Friday out there. Appreciate you being here with me every single time you're here. Thank you so much from the depths of my heart. I appreciate you. So this article here is from the dailyhodl.com. Unbelievable. I'm telling you. It says U.S. government to borrow $1 trillion in Q3 as deficit widens and debt servicing costs shatter 11-year high. This is the Treasury estimate. All right. Look at this. Unbelievable is going on. The U.S. government is dramatically raising expectations on how much capital it needs to borrow this quarter and amid a growing fiscal deficit and dwindling cash reserves. The Treasury Department says it has increased its Q3 borrowing estimate to $1.007 trillion. They iterated something similar to this in a previous article we just covered. Significantly higher than its prior May estimate of $733 billion. We're going to leave that there. Wow. I mean, the pressure is just growing and growing and growing on the legacy financial system. This next article here is from kitco.com. I'm going to cover a little bit of platinum news. All right. Platinum has grown on me over this last year. Don't get me wrong. I love gold and silver is at the forefront, but platinum has definitely grown on me. Okay. It says platinum should enjoy strong industrial demand. Didn't I say we discussed this before? And I told you there's a shortage of certain things that were going wrong with a lot of the companies that were mining platinum. But let's keep going. It says strong industrial demand growth, even as prices rise significantly. Platinum's key role in decarbonization and electrification technologies means the growth in industrial demand for the precious metal should remain strong during the global energy transition. We've discussed this before, and it should continue even if prices spike due to constrained supply, according to a new report from the World Platinum Investment Council, WPIC. Quote, platinum chemical demand from 2013 to 2023 has grown at 3.4% CAGR, higher than global GDP growth of 2.7% CAGR over the same period, suggesting increased appreciation for platinum's role in improving process efficiency with lower energy use and higher yields. It says, unquote, wrote WPIC researchers in the latest Platinum Essentials report. Quote, looking ahead and including a cautious economic overlay, we project 1% growth in platinum chemical demand between 2022 and 2027. However, based on historic correlations with growth in chemical manufacturing capacity, we estimate that platinum chemical demand could be C100 KOZ higher than 2027 than in our current forecast. So they have a nice chart here. Everything is looking good with platinum. I think a lot of the commodities, because of their utility or their functions like store of value with gold, I think they're going to do very well. You see that demand in silver is increasing. You see demand in platinum is increasing. Gold is I think that it's the more widely known safe store of value, and it's directly tied to the stresses of the world when people need to retreat to something. So, just off of that alone, the future is looking very good. So I feel very comfortable right now with the future outlook in long holding platinum, silver, as well as gold. Everything's looking good in my humble opinion. So, also, I want to say this, everybody. Be careful if you made it this far. Be careful in that comment section. I had to remove 2 fake alpha names in there, all right? My name is always going to be in gray. I think you know how I speak by now. My name is alphaneme2 on YouTube, not alphaneme2 underscore or alphaneme2 underscore, none of that stuff, okay? Be very careful. I'm not going to be in the comment section trying to give you a special number, trying to sell you something. I don't even have links in my description box, right? I don't do that kind of thing. So be careful. There's scammers in there, and I'm not the only one. They do this on every website, everywhere. They take your picture and they try to do some sort of iteration of your name. So be careful, please. Please don't reach out to anybody. I don't have a Telegram. I don't have a WhatsApp. I don't have a special number for someone to call. None of that stuff. So just be aware. I haven't seen that in a long time, but it's occurring again. So be careful, everyone. I appreciate you greatly. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.